Guys, what if everything happening with the US economy, financial markets, and crypto is no coincidence? Behind the panic, market crashes, and rising inflation is a calculated plan by Trump unfolding before our eyes. Why is Trump introducing tariffs, claiming he doesn't care about the stock market, and disrupting the economy that had just recovered from the pandemic? Despite Trump's campaign promises of economic prosperity, his actions tell a different story. He's playing a strategic chess match, deliberately weakening the US economy from within. The goal? To push the economy into recession. Market panic is forcing investors towards safer assets like bonds. Exactly what Trump needs. Why? Because higher bond demand lowers their yields. The US government has a massive $7 trillion debt due in the next 6 months, and refinancing at lower interest rates would be much cheaper. Furthermore, in 100% of cases when the US approached recession, the Federal Reserve cut interest rates, flooding the markets with trillions in liquidity. And what happened to Bitcoin every time global money supply increased? Those were the biggest bull markets in history. So if this chaos is part of a larger plan, what's Trump's next move, and when will markets take off? Today, we'll break down Trump's secret plan, expose what mainstream media isn't telling you, and explore the hidden connections between politics and finance. The fear is palpable right now. Everyone's on edge with recession fears, and Trump benefits from this chaos. Here's why. In the coming months, the US must pay off $7 trillion in debt. The options are: declare default, triggering a global financial crisis, or refinance. But on what terms? Trump doesn't want high-rate refinancing because it's too expensive. At year's start, 10-year Treasury bond yields were 4.8%. Bonds are government obligations. Buy a $1,000 10-year bond, and the government repays with interest. Trump isn't happy with current high yields. What's the solution? Drive bond yields lower by creating market panic and fear. While everyone expected Trump to boost Bitcoin, he was implementing mass layoffs, cutting government spending, and increasing unemployment to slow GDP growth. Early recession warning signs. It worked. JP Morgan analysts raised recession probability to 40%. When investors hear recession, they sell risky assets like stocks and crypto, buying safe haven government bonds instead. Rising bond demand lowers yields, making government debt refinancing cheaper. Anthony Pompliano noted that since Trump took office, 10-year Treasury yields dropped from 4.8% to 4.2%, calling Trump's bond market strategy spot on. To maintain market fear, Trump keeps introducing new tariffs, starting with Canada and Mexico, then China, then doubling down. Meanwhile, media headlines about inflation, falling consumer confidence, and recession fears push stocks and crypto down further. And the cycle continues. Investor panic drives bond purchases, lowering yields and creating perfect conditions for Trump to refinance US debt on his terms. March's GDP data might show economic slowdown, playing into Trump's strategy by pressuring the Fed to cut rates and print money, potentially skyrocketing markets with new liquidity. History shows the Fed responds to recession fears with money printing 100% of the time. Their biggest concern isn't inflation but preventing full recession, exactly why Trump is pressuring Powell to cut rates. Now, let's tie this back to Bitcoin. Analyst Raoul Pal notes crypto is experiencing temporary liquidity squeeze while M2 money supply grows again, crucial for market growth. He compares today to 2017's correction when interest rates were high and the dollar strong, before markets rebounded dramatically. According to the logarithmic regression channel, the market remains in an uptrend despite correction. Powell believes this isn't the end of the bull market, noting that rising ISM index signals economic momentum, extremely bullish for crypto. Trump's likely next move, ensuring upcoming economic reports look bad through new tariffs or market negative statements. Treasury Secretary Scott Bessent recently stated they'll do everything to lower interest rates, while the Commerce Secretary said Trump's leadership would bring strong financial markets. This suggests Fed rate cuts in the second half of year. When the Fed cuts rates and prints money, liquidity floods the economy. With crypto now more mainstream, it could absorb a larger share of this capital. Some analysts claim Bitcoin has entered a bear market, but let's compare cycles. In November 2021, Bitcoin dropped 41% in 60 days. Currently, it's down only 31.5% over the same period. Also, unlike 2021's strengthening dollar, today's dollar index is falling. Historically, when the dollar weakens, Bitcoin surges. We're in a bull market correction during uncertainty, tariffs, job cuts, lack of Fed support, and recession fears. Some expect Bitcoin to test $70,000. Arthur Hayes believes a Bitcoin drop to $70,000 is normal bull market correction. He predicts central banks worldwide will soon cut rates, implementing quantitative easing, which historically benefits Bitcoin. In March 2020, when the Fed announced QE during the pandemic, Bitcoin traded at $6,000, reaching all-time highs by November 2021 after the Fed injected $4 trillion into markets. Trump's strategy is no coincidence. It's a calculated plan executed step by step. It's hard to believe his goal was presidency just to destroy the economy, though I can't guarantee that 100%, so don't fear bad news. Everything happening is part of Trump's larger plan to create perfect conditions for market growth. When the Fed cuts rates and prints money to flood the economy with liquidity, that's when things will really take off. Well friends, that's all for today. Don't forget to subscribe to our channel to stay updated on new videos, and share your opinion in the comments. Good luck, and until next time.
Wow.